Hello, fellow traders, investors, and market enthusiasts. My name is Curtis, and I have a website called Beyond Backtesting. And I've been a market enthusiast for years, studied the markets, primarily the S&P 500. I've made many calls, built algorithmic trading systems, and called markets, predicted markets for many years. And I want to do something a little different in this video, and I want to share some investment theses for 2022 that I've been looking at that have my interest. Before we get started, though, let me just say that even though we're looking at investment theses, nothing here should be considered as investment advice. There's a big difference between a thesis, an idea, and what you should be doing personally. Trading is risky, and again, I'm not an investment advisor. Nothing here should be considered investment advice. And just because I share a market thesis does not mean that thesis is any more or less likely to be true. Right? It's just an idea. Reality may have a different idea. Okay, whether or not I'm in the trade or not also does not give it greater or lesser credits to working or not working. Right? Does not necessarily mean it's more or less likely to work if I'm in it or not in it. So with that said, out of the way, again, this is my personal opinion, and nothing here should be considered investment advice. I want to be clear on that. Sharing ideas. We'll start with the first. What you see here, if you can, I don't know if this will show up in the video, but you see this drop by indicator I created, actually, and I haven't used it as much as I should have. Actually, does a great job of in strong trends of capturing the lows. And this was built for crypto. I actually built this for crypto, for timing crypto, because crypto tends to run parabolically and doesn't give a good low risk buying entries. And so I had to kind of build this. And honestly, I haven't used it very much, but it looks really good. Works really good when the market's strongly trending to give you these low risk buy entries. So what we're looking at here is Activision. This is a 3-day chart. And Activision, this thesis is pretty simple. Microsoft came up with a buy offer that they're going to pay $95 for Microsoft. From the current price level, that's about a 20-some% gain, represents a 20% gain. And it's pretty much that simple. So you see here, we kind of break below this support here. This was the news came out. We kind of traded and kind of chopped around. Then we kind of break below the support, which surprised me. I didn't expect that. Was looking at buying here. Kind of got a little concerned in here. And the market was falling. We kind of followed the market, even though this is buy offer. Warren Buffett said he had put about 10% stake into this. So to that nature, we had a bounce. Okay. And so I've been tracking that, and the question now is was that just a sell the news bounce, or what's going to happen with this? And I don't think anybody knows, unless they have inside information. But I do like that you're essentially getting you're essentially it's an arbitrage opportunity in theory, where Microsoft has already said they're going to pay $95 for this, and it's depending on the market goes, a 20% gain looks pretty good. The other thing I look at is it actually has traded above that. They did announce that they accepted it, and it's traded above that in the past up to $100. So, technically it looks like it could do that anyway. The bearish thesis for this would be European regulators, U.S. regulators have to approve this. The fact that it's traded so much below the buy offer may indicate that investors, don't have confidence in it. We have those negative earnings report, but overall, I like this. The confidence. I can't really say confidence on this, but I do. I see this as a potential. The question is how much are they going to try to run this down? And I think they will. I think they're to run out the small investor before it finally gets to 95. How much are they willing to run this down? How much? And maybe that's done since that Warren Buffett came out, or maybe there's some big money trying to push this down, or maybe some other leverage traders, who knows why. But, we could see this come back down and then finally go up. But I do like this. Confidence, it can't be that high because we just, we don't know all the factors that go to this. But it's an arbitrage opportunity where they're saying it's worth 95, market saying it's worth 77. Who knows? As Warren Buffett said, it will. It'll do what it does, and if not, you own Activision, which to me doesn't seem that bad of a deal. Okay, so that's the first thesis. Second thesis is Delta Airlines. Now, this thesis, this is my stock pick of the year, and this thesis is pretty simple. Essentially, it hinges on the fact that Delta Airlines never retested this high, and post-COVID, where most of the rest of the market took off and went above the prior highs. So that represents value to me, and I also feel like technically we should test these highs at some point and even exceed these highs. Also, looking at the fundamentals of this, what drove this down during the COVID, those factors seem to be dissipating, giving it, in my opinion, a fundamental reason to rally. And if you look at these, what it could do from the current price level just to the highs, a 74% gain potential, and maybe we go above the high, which would not surprise me one bit. You get a 100% gain. So the thesis for this is simply a technical. We know I want to see this pattern complete, and also again fundamentally, I feel like the factors that drove the airline traffic down during the COVID, those factors are largely dissipating. Therefore, we should see a return to prior value. So that's the bullish case for the factors. The bearish case is simply this: if the S&P 500, if the market overall, the markets go into a very bearish market, then all bets are off, so to speak. And that's kind of the risk of this. It has tended to act sort of like a levered S&P 500 bet, and that when the market goes up, it goes up more. It was showing some relative strength, but if the market really crashes hard, it's going to be hard to imagine this thing just doing its own thing and going to the high. So that could happen, right? That's kind of the downside. Is the risk is that we're in some kind of the S&P gets really hit hard, and then we, it pulls us down. Technically we traded up to this high, we gap filled, and now we've pulled back, and we started to make this downtrend channel. We tested the upside, broke it to the upside, and then we pulled back inside it, started to rally off this kind of this midline area, and that's what we're looking at technically. It really comes down, in my opinion, is how for this thesis now, it's really all about S&P 500. If the S&P 500 is found doesn't go much lower or doesn't get really hit hard, then I think this is this scenario has to play out, or will play out. Not has to, but it will play out. Risk reward, right? Let's say what happens if it doesn't play out. Maybe we go down to here to this pretty prior volume area, 33% down. So you got about a 2-to-1 risk reward. It's not, about 70% on the upside, 30% on the downside. Not too bad, really, even if it doesn't play out. But it does move fast. It tends to trend. Hard to the upside and hard to run, hard to the upside, hard to the downside. I like this. It's just that the timing is really tricky on this because we could run really hard down. You'd be down 18%, which don't like that. I've been in this time this several times. But essentially, that's the thesis. We would test these highs, take these highs out at some point, unless we go into a really nasty bear market, in which case all bets are off. Well, I could do it here. So the S&P 500, okay, where we look at the the ES or the S&P SPX, you better usually do the analysis in SPX actually. So I've been running different analysis on this, and I won't be able to show this analysis in this short video in a really meaningful way. But I was looking for it to come down and test 3,800. We got a strong bounce up to 3,800 level. And just looking at what it tends to do historically, when it comes off of a high, I think there's a decent chance we're near the low. I don't call lows or highs. I talk about peaks and valleys, or I don't call bottoms. I'll say this is the valley because I'm not saying it for all time, but it really looks like this may be, we may not trade much below this. Now, why I say that, the thesis for this is, again, I'll just probably show all this. We've got to the weekly. Maybe I can show an example of what the type of, Okay, so one way we can do this is we can look at this indicator does well for catching the bottoms, as long as we're in a strong uptrend. If we're not, once we break below that, we're in a downtrend until we regain above that. But we can look at how much we've tended to fall below this, historically, and you can also do it from the high. You can do it either way, and just kind of look and see. So from the high here to the current low, we're down 20%, and we can just go back in time and look and see what what we look at as bearish conditions. What that does, that's 35%. Here's one, and this is just average. Obviously it's random, so it don't have to be perfect. 20%. Okay, here's one. That's 12%. Okay, and we got one here. 15%. Going back. 20%. Okay. 18%. 58%. 50%. 35%. About 20%. 27%. So we can see that, while we do have, obviously it can extend, we can have a much bigger sell-off, that this is about an average, sell-off from the peak, from the market peak, and that we could be near an inflection point bottom here. We're either, I look at it, we're probably either around here now, or we're 50% of the way there, which would put us down here at this lower level. Now, so the 3,800 was the level I was going to be tested. On the weekly, we're still down, and we haven't. We always want to see like a flush out and real panic. I don't think we've had that yet. I think that comes. So that's the question: as we get, do we get another drop down? But I think we're close. Looking at this now, historically we've had these really, V bottoms that come up really quickly, and so buying low has paid off. So look at from a risk reward. Let's say your reward is, say, the prior high is 25%, and your risk here is, we'll say, maybe this, obviously we're just guessing here, it's like 12%. So you're 2 to 1 even if we have pulled down lower, based on this analysis, that we wouldn't drop below more than, say, that's give us a 30%, which is getting there to the higher ones we've seen. Although you can have a 58% peak to valley, draw down to 50%. Nothing's guaranteed in the markets, but looking just historically, this is statistically, it's starting to look like a buying opportunity. We're seeing some major price levels as well. Again, this 3,800 level coming to play. Do not necessarily expect this to play out immediately, but I think that we may find the bottom somewhere in this range. So I like that. Microsoft. This is this one was weaker on Friday. I do like Microsoft. However, it's a little weaker. The question is, okay, so we may be nearing finding a bottom, but what will lead the market higher? What will drive the market higher? What stocks will drive the next bull run phase? Will it be the Microsofts? Will it be the Apples in the prior stocks? Or will it be something different? And that's my concern with Microsoft is simply that not that necessarily we don't find a bottom, but simply the return going forward is lower. So a little bit concerned on this one simply because it was weaker on Friday, and don't know that's going to continue to drive the market higher. It is at some point going to be a buy. It's worth watching. What price is a good question. What price is a good question, and yeah, I'm not quite willing to call this one. We see we've also dropped below the monthly here. Well, this is a great indicator. When you're in a strong uptrend, caught that monthly low, We've dropped below that, so we may see a couple more months of downtrend in Microsoft. Okay, Million Token. Now, this is one I want to share a little about. This is one I hold actually, and I originally made 10x on it. Was up 10x, and I've always said don't buy anything that goes parabolic. And you see here it went parabolic, it came back down, and I bought in more, so I went down on it. And it's one of my, it's kind of been my rule: never buy into anything that goes parabolic, never rebuy into it. And I did, but we had the shakeout of stablecoin, Luna, Terra Luna. I don't know too much about it, but UST, there's a little thing there. Now, this thing about this coin, a token, is it has a, I've done the analysis on it, and I always felt that the fundamentals were strong on it. It's a 1 million fixed cap. It's so there's never going to be more than a million. It has a $1 backing. Okay, so it can never drop below $1 in theory. It says $1 backed. It's $1 million liquidity. So and we, it's been pretty much just a downtrend, just a bloodbath, and it looked like it was pretty much dead. I pretty much consider this dead money. However, when this, if you look at it, we came down to, we dropped down to $2.54, and we had this kind of big rally back to 3.43. Let's see here if we can see it here. Here we go. 24 hours is say a 12% return, but it's it had this pretty strong rally here. And I've been thinking about the stable coins. Could this be a stable coin or something? Now that we've seen these other algorithmic stable coins not work, this is kind of decentralized, and that it's kind of a decentralized stable coin. The thing is that as it approaches $1, okay, your risk reward becomes highly asymmetrical to the upside, because it can't drop below $1, and upside is potentially unlimited, or so the question is does this, what happens with this? This kind of an experiment, and I consider it dead money in any regards, but at the same time, I did originally, my thesis was it could go to $500 or $1,000 based on other crypto projects. This first phase there was a question about how much liquidity was real, but if you can get it close to $1, the closer you get to $1, the greater your return is, the lower your risk is. It does fascinate me, and I see, depending on where, if you could get it at the right price, return potential is very high. I like the fundamentals. It's 1 million fixed supply. There's also there's a staking mechanism, which actually have my million in the staking mechanism, and so a lot of it's tied up. So I've been kind of questioning how it keeps falling anyway. How do they keep driving this down, and how does it move? It moves to market. I would like to understand this better. How this thing, because you get about $70,000 of trading volume. Is that just robots trying to arbitrage the market? How can you arbitrage something this, something like this? It just, the markets are very fascinating. This is one of the more interesting ones, I think. Again, be clear on this million token. I already own it. I thought it was dead money, but the fact is, it can't go below $1 because it's liquidity backing it at $1. It shouldn't go below $1. If you can get in at closer you get into $1, your risk reward goes asymmetrical, right? And it's just fascinating. Does that liquidity pull that to $1 and hold it there, right? Or does this proper, people think about markets and stocks and things as things that live or die, right? Okay, this thing's dead, but this can never die. This, there's no, as long as that liquidity is there, as long as the inventor, tech lead leaves it there, then it can't die. It's not alive, and it has a unique property of $1 backing, fixed supply. Permanently fixed supply. So 1 million token. Okay, it's deflationary in the strongest sense. So it's an interesting one. If it goes to close to $1, maybe it soars back to $30 or something. Very very risky. You can see that over. I'm not willing to say it's not dead money yet, but it really roared back from these lows, and you gotta wonder what these algos are thinking, or if they are thinking at all, because this is not something that can go to zero. If somebody shorted this, I don't know how they would do that, thinking the fair value is $1. They're taking a very big risk at this point to stay short. So maybe it runs back to the price level I'm really looking at for this thing to run back to is around $60. Around $60 would be a level where I think you see a lot of strong sell resistance. We did have one run over the summer back to 30, and then it collapsed back down really, really hard. Another thing about something like this is you wonder, in terms of pumping with only 1 million tokens, very limited supply. Why would these pump and dumps not try to pump this up? You kind of wonder about that, given that it's fundamentally it is sound. So I'm not willing to count this as not dead money yet, but it's maybe it's not. Maybe it is. It's an interesting one. Certainly, again, it's highly risky. Again, I consider this dead money. But seeing this bounce, and honestly, I'd be tempted to buy some more if it gets down here, in this range, simply because the reflexivity of it is it can't go lower than $1. If you could get in $1, say, it probably never go that low, but if it does, then say you get $1.20, you can only lose 20%. How high can it pump? 4, 5, 6 times? So you get 6x to 20 cent. The other possibility is, and this is the one thing I thought might happen, was the volume might just die. Might just trading might just cease on it. But we've there's not very much trading on it. There's $70,000. Looks like it's trading volume. So maybe that's how it ends. Maybe it can't die, but maybe this trading volume dries up. But thinking also that with these algo stable coins not working, maybe this becomes some mechanism of value, so that's kind of how I look at this one. Again, this one I'm down on, so maybe my reasoning is not as sound as the others, because I've been down on it, but I have no intention to sell it until a specific time as such as it benefits me. I'll just plan to hold this, consider it dead money. Now, again, more into the speculative stuff. For those who don't know, there's a cryptocurrency was called a scam when it was first introduced, called Hex, produced by Richard Hart. He does a lot of marketing stuff. Seems like a smart guy, but obviously plays to a certain audience. Has a certain theatrical side to him. And this Hex token was introduced. I don't know if this is 2020 here, but people were saying it was a scam at that time, and I remember hearing about it. It's got an interesting thing where you can stake, you can top your money, and you get back Hex. It's a convoluted thing. I remember hearing about it, and everybody said it was a scam, and thinking about just because it was a fascinating system, and basically deciding, okay, it's probably a scam, and ignoring it, and you can see that it did a 11,000% gain, scam or not, and so about a year ago or so, he's introduced this idea of a pulse chain, and there was an early sacrifice phase where you could donate either directly to the project or to the SENS Foundation to get this new token. And the motivation came because the Ethereum developers changed the cost of, first, the Ethereum fees are very high, but they also changed the cost of certain operations that the Hex required. The Ethereum is almost like an operating system, right? And so they made certain operations cost more, such that Hex became, the premise of it became more difficult for anyone who's not trading large volumes, because simply the cost of executing the contracts and stuff. You put in, this thing has a time staking value. You put in maybe $100, you get back maybe $30, but the Ethereum fees to transact might be $100, right? So you can't even you can't get your $130 because of Ethereum fees. And so this Richard Hart guy is going to be introducing this Pulse chain in the next 12 days. Now, I was an early investor on that, or an early contributor, what you want to call it, and so I have a sizable amount of Pulse coming, and so I started looking at this Hex again because I'm looking to buy Hex on the new Pulse chain, the PHEX. I don't have any. Well, let's say this: I may have some Hex now because I bought some just today, actually. So I have it when the chain forks. So this is kind of gets into a lot of crypto stuff. Is it a scam? Is it not? I have no idea personally, but I can look at the return it's did. So it's worth it was worth it for me to take a risk on the Pulse chain, and so I bought this for the simply for the to have it on the PHEX. I bought the Hex so I can have the PHEX when it comes out. Again, very speculative. A lot of these crypto, just like the Million token, very speculative. However, I listened to the guy, and it's a lot of theatrical stuff. A lot of this stuff, I think, when I listen to the guy, it does sound reasonably intelligent. With this, whatever will happen here, I don't know, but it's a very interesting project. The staking mechanisms and all. And if the Pulse chain takes off, then maybe we could see something like this again for the Pulse chain or the PHEX on the Pulse chain, right? So that's kind of the thesis for this. It's simply, it did it before. We've seen this also not just with this. You can look at Ethereum, and we've seen this play out with Ethereum. We've seen this with Bitcoin, and we've seen this before, so it's not new. Was hoping to see it with Million token, but we've seen a different thing with the hockey puck growth and then the collapse. So the difference being is that he's did this before. He considers a success, which at least appears to be so far, and it's just he's did it before, and results is what matters, and the way I think about it. And if marketing a certain way, if that helps drive adoption, if that's what needs, if you need certain game theory, if it's all just a game, whatever, if you get 1,000 times return, 1,000 is $1 million, right? So, if you can get 1,000 times return, then you can take 1,000 to $1 million, and that's really what I see this as. So I bought a small bit of this. I'm interested to get into this simply but to see what it does. Will it eventually implode? It would not surprise me if it did. Will it continue to appreciate a low return? That would not surprise me either. Either one. But I have bought a little bit of this primarily so I can have it on the PHEX, and again, we'll have some of the Pulse chain when it comes out. So again, as far as the Pulse chain network, will it be adopted or not? I don't know. However, the Ethereum gas fees are a problem, have been a problem, and if it solves that problem and the transactions are supposed to be faster on it, if it works, then I don't see why people wouldn't adopt it. The question is, what's the value in the chain versus the is that kind of the plumbing? Is the value in the plumbing? Okay. We look at Bitcoin. Since I talked about Bitcoin, we got some lines there we touched. Surprise! I don't know if I drew these before or not, but probably did. With Bitcoin, I'm not really willing to put an investment thesis on this yet. I will say that I don't think we go below about 12,000. 12,500. Now, the Richard Hart, the guy I just mentioned, he's calling for 10,000. Okay, a lot of bears are calling for 10,000, but I really don't think we'll go below 12,500. And you look at some of these previous, some of these previous troughs, 14,000, 20,000. I'm not saying I'm not calling we go down to that level, but I don't. My thesis is we probably won't drop below that. But that's just a feeling, right? That's just not. It's based on, we had this big. Even if we were to perform a symmetrical triangle here, it would take us back to this area. So I'm not one to call anything on Bitcoin yet. I just don't know what it's doing. I feel like we're probably going to, probably going to be in a bear market for a while just because of restrictive factors. But I don't know that how much it's going to fall. So I could see something like, I wouldn't be surprised to see something like, this, or this. The question is with Bitcoin. I guess we need to end this up, but the question with Bitcoin is simply this: if Bitcoin, can any crypto survive if Bitcoin doesn't survive? Because there's this question of the utility of Bitcoin, and retail wise, we can look at Coinbase. One of the risks now of owning Bitcoin, if you have it on a exchange, is that we had this 16% gain here. That's pretty nice on this one day. But the risk is that if Bitcoin, if the exchanges fail, then they can confiscate your Bitcoin. The other question is can any crypto survive if Bitcoin doesn't, right? And there are a couple theories on this. One is Bitcoin won't survive because it'll be replaced by better technology. Better technology always wins, would be one theory. The counter theory would be that Bitcoin is the only crypto that truly is unique, that truly can survive. And so, big topic now is, do I have any call on this? Not. So, do I have any call on this? Not really. If I was to make a call on this, I'd simply look at, let's see if we can see something on the weekly. Okay. Yeah. For this, I would look for, we tend to run on the weekly. So, if we can form an up week on this, then, we could retest this, some of these this usually acts as resistance. So you've got a potential, but we have to, if we get a small week, let's say this, if we get something like this would be a very low risk entry. But if we zoom up here, then I don't see any buy there. But if we can form a weekly an up week, and it's not too much, then you can use that prior week low as your risk, and then your reward could be potentially up to here. But don't really know what this is doing, so don't have any real thesis on this on the Coinbase. Again, on the cryptos, not much of a thesis on that.